All right, how about now? Is sound working now? Good morning, good morning. Yeah, sound should be good. Sound should be good now. All right, excellent. So welcome to the December 18 Charts and Coffee. I haven't done that in a little while. Yeah, just adds to the drama. All right, thanks, gang. All right. So again, welcome December 18 episode of Charts and Coffee. I want to kick this off with a reminder that this is in fact triple witching. And like I said, the cat is making a cameo. Let's see, there he is. So we want to remember that when we have triple or quad witching, must you wreck the joint in the middle of the show? All right. So let's remember that this is a caution day. Let's talk about caution days for a moment. Caution days are those days where there is an event on the schedule that everyone's aware of. These are not events that are sound bites or unforeseen. They're scheduled, they're on the calendar. And what that means is that ultimately on a caution day, what you're going to have, especially on a witching date where the strikes are going to be in play, you're going to see a lot of movement around those prices in stocks, in ETFs, in futures, where there's more open interest and volume. All right, it's like gravitational pull, only with a twist, because expiration happens today, and you're going to see the way in which price will jockey around those very, very liquid levels. How do you know if how do you know if you have a liquid level in a expiration? Well, let's do this. For example, I have a position in Deere. Okay, I have a position in Deere, and let's go take a look at that. And I'm going to bring over the options chain. All right, here we go. Okay, so this is Thinkorswim. So here's our expiring part of the chain. Chain meaning, this is the options for Deere. Now, one of the things that we did in our Sector Secrets Mastery, which is another, so I do two things here at Simpler. For those of you that are unfamiliar, I conduct, I'm one of four traders in the Simpler Futures room. And then I have a separate options on stocks and options on ETFs service called Sector Secrets Mastery. And in the Sector Secrets, what we have is a position in Deere. Now, you might say, well, what's Deere got to do with anything? We think about heavily weighted stocks in those active ETFs. In other words, a passive investing universe. The passive investing universe has been fantastic for traders because what it's done is it's told us where the action, where the eyes, where the attention, and oftentimes where the liquidity is. So I'd like to see Deere continue to move higher. Let me show you what the chart of Deere looks like. All right. So how does options expiration work? Well, I have this level right here at a Darvis high. That's a Darvis level. And I'd like to see Deere get up to about 265 and a half. Now, I can take a look at the options chain and look at where the liquidity is and get an idea of where that gravitational pull may be. So if you're in a stock, look at where the open interest and volume are on both sides, puts and calls, and look at where it syncs up. That's a really easy little simple approach to dealing with the volatility of a day like today. Okay. All right. So what else do we have here now that our sound is working? What's my take on the skew? I'll be straight up. I could care less. I really could care less. Remember, gang, well, maybe I'm being dramatic, but there's certain indicators. So let me, before you guys go, oh, wait a minute. What do you mean you don't care about the skew? I don't care trade to trade. I don't care moment by moment. Okay, so what does that mean? If I'm looking out the window right now and it's a gorgeous, crisp South Florida morning, this is our winter. It might be maybe 50 degrees out or something. I'm going to look out the window and I'll get a pretty good idea that I need to, maybe dress warm, more warm than I would than I did yesterday, right? It's an overall weather report. It's an overall, well, this is what the weather is going to feel like. But then It doesn't tell me what it's going to be 3 hours from now, 6 hours from now, or even tomorrow. It's a general landscape, a general environment, right? So I guess what I really want to convey to you guys, I'm not trying to dismiss it. Please hear me out. That's not the point. What I'm trying to say is don't think that's a trading signal, right? I think a lot of traders look at certain things like skews and put calls. And yes, I keep an eye on those things. It's good to know what the overall environment is like, right? But it's not a trading signal. I think a lot of people would look at an elevated read on certain kinds of indicators, these kind of environmental indicators, and think, well, that's clearly a signal. I need to short the market, or I need to, whatever the tactic may be. I don't do that. Are there other traders that might? And sure, I would definitely, refer to them, because what I want to tell you is I think a lot of traders confuse that overall environment, which may have been that way for days, sometimes weeks. You know what's a really big culprit of that? Let me just switch away from skew or even put call ratio, which are exceedingly helpful, of course, but not in timing, right? So macro, right? I'm actually writing up a pretty heavy duty macro update right now as we wrap up 2020. I'm going to do this on next Tuesday, Sector Secrets Live Trading, and I'm going to do a deep dive on some macro, which ETFs want to keep an eye on, what happens in the reflation trade. We're in what I call a B sector, a B stage of our macro, our 4-stage macro cycle, which is, growth increasing, inflation increasing. We can see what's happening in crude and copper, things like that. But macro too, macro has really hurt a lot of traders over the past 2 years. Okay, let me show you what I mean. Let's zoom in here. Okay. And some of the things I say, gang, are going to feel a little, controversial. And I hope so, because I want you guys poking at the dogma that's sort of accepted in trading and go, well, why do we do this? Why is it applicable? Do I really have trades whose timing has been benefited by some of these indicators? When are these indicators really helpful? Maybe more so than triggering an entry, it's going to have me curb my longs, be more conservative in my longs, be more patient, right? So that's what I'm saying as far as a nuance. I hope that makes sense. All right. So let me mention, here's copper, here's crude. I know I'm going down a bit of a rabbit hole here, but it's an important one. And so thank you. Thank you for the question. What's my take on, and I see a couple of questions about the skew. So it gives me an overall environment, right? But so does the current macro environment, which is telling me stay long stocks. So does the move higher in copper and crude, which also says stay long stocks. Right? What are these other factors that are actually beneficial? The Federal Reserve on Wednesday pretty much signaled to stocks, or the stonks, as I like to call them sometimes, that they're going to keep that bond purchasing program in place, which, as we've talked about since Tuesday, drives the market into equities and to corporate debt, right? So there's not much for me to say that suddenly we're going to get some big rollover because of the skew. I hope that makes sense, okay? So yeah, let's take a look at a few charts here. So I don't really use it as a timing, it's an environment. So a little bit of a deep dive there. I hope that makes sense, okay? All right. And good morning, everybody. Excellent. All right. Yes, if you have any questions, feel free to put them in here. So what are we trading today? Dennis, I'm not going to be trading a whole heck of a lot. What I'm actually doing today is a lot of, so one of the things that I sent out in as alerts to members is, hey, let's start thinking about reeling some trades in. Let's think about putting some trailing stops in the market. Let's think about bracketing, having a target 1 to the upside in case some of our names like Estee Lauder run, or positions and things like the solar ETF TAN. In case these run, let's make sure that we have an upside target, but then let's also make sure we have a trailing. So I'm basically bracketing my winning trades to make sure that I'm putting something in my account. So today is really more about management, not about a lot of entries. Now, you might say, well, don't a lot of traders do pins and stuff? Yeah, some do. I don't. Right? What I like to do with options expiration stems back to a conversation that we had last Tuesday, Wednesday, Thursday, even Friday, which was The second week of the month, that pit bull low, how do I prepare for, how do I trade into options expiration? Take TAN, for example. You go back to, let me show you here. You go back to last Tuesday, Wednesday, Thursday, 9, 10, 11, December, which is right, that's 10, that's 9, 10, 11. This is where I'm building, this is what we talked about here in Charts and Coffee. This is where I like to build my position. This is where I'd like to position myself for the inevitability of the volatility of options expiration. I'm not looking to position myself in here. This is not what I want to do. In other words, Thursday or even into Friday. And do you see how the markets have moved up? This is much like looking at runs into earnings and things of that nature as well. I like to position myself well in advance of high tendency moves that we'll see in front of this volatility day. Not that different than the way that I was telling everyone on Tuesday, hey, don't short in front of Powell. You might think about a little bit of a pullback after 2 p.m. Wednesday when Powell speaks, but going into Powell, the session before, let's take advantage of that move. So it's a slightly different perspective, and I hope that resonates. I hope that makes sense. Okay, so let me scroll into a few more questions here. And thanks, gang. I think I forgot to just turn the mic on in the software. So thank you. Yeah, coffee first, drama second. Always. I like it, Jonathan. Thank you. So what are we trading today? So Dennis, yeah, what I want to remember is I'm managing today. I've done all the heavy lifting. I've put myself in a position to pay myself on a Friday. And who doesn't like that? By the way, what else do we love on a Friday? The season finale of The Mandalorian is today. So super excited about that. Those of you that wait for the final episode to complete so you can just eye guzzle the season, well, today's the day. So what am I trading? I am long Mandalorian, and I am winding out of trades that we built last week and earlier this week. Okay, so what else do we have here? Yeah, we'll take a look at some charts. Yeah, I don't mind a frothy skew. I don't mind those things. It just is more of a warning about the environment. So thank you for those questions. Yeah, I'm only slightly joking about a Florida winter because South Florida winters for most of the country, especially for those of you in the Northeast. Yeah, it's kind of hilarious for a South Floridian to talk about winter. We don't know what winter is. We got two seasons here, hurricane and summer. So yeah, I hear you. With where Amazon is today, hey there, Jordan. With where Amazon is today, do I think it will likely sell off and pin somewhere? So kind of going back to what we were talking about before, Jordan, of all the things that I've been playing, one thing that I'm not really interested in when I look back on my journal of the names, what are we in? What are the things that we're either in? Well, these are actually positions that we're looking at or are in our sector secrets. XLB, DE, WMT, CRM, ADP, TAN, Starbucks. Let's see. Those are names. And if you go and look at those names, all 7 of those, one of the things you'll notice is that they're all markets that are moving higher or were in an uptrend, not in arguably congestion like Amazon. So what I feel, and again, gang, this is 20 minutes of my opinion, right? 20 minutes of opinions that I've earned over 3 decades of trading just about every market. And that is your best advantage on any kind of day, a Tuesday or an options expiration Friday, is going to come in markets that are typically what I call double green, trending higher. Whether you like to momentum breakout buy, whether you like to pull back buy, the markets that are going to behave in the most predictable way are going to have typically double green, or they're going to have been double green. You can see the history here of that indicator for most of the recent memory, right? That's going to be their typical way of operating. So Amazon, whether or not that happens, Jordan, I don't know. I don't have any skin in the game. I'm not playing that. I'm looking at names like this. I'm looking at names like like this. This one's yellow, and you might say, "Ooh, Walmart." Yeah, I've got my eye on Walmart. We just hit our third entry zone. It was green. It's one of our slightly more bumpy uptrends, but you'll notice for the most part, it's been grinding higher, right? Let me point out an example of not a textbook example of an uptrend, right? Now contrast that with Amazon again. Do you see how there's not a grind higher that you can see, even though it's kind of ugly? This thing goes off-road every now and then, but it definitely is pushing up to those higher highs more consistently. Those are the kinds of names that I'm looking to play, my friend. How do I time the holiday trading hours? Al, on those days where we have half trading days, it's typically illiquid. You're going to have a lot of traders not really paying attention. I just avoid them altogether, Al. I just avoid them altogether. I'm very cautious these 2 weeks, really between now and New Year's, or when we come back the first Monday after New Year's. So I try not to build big positions. I try to think about winding down certain positions. One of the things that we do at Simpler, and John does this every year, is the tax harvesting. He does a special webinar. So there's a lot of different things that happen at the end of a day, end of a week, end of a month, end of a quarter, end of a year. End of something is a very different behavior and therefore tactic to the beginning of something. So keep that in mind. This is not when I'm gearing up. There's a lot of things that I am looking at, and I think the macros are macroeconomic analysis, growth, GDP, monetary policy, money supply are pointing to this reflation trade that we've been seeing. I've been talking about the reflation trade in my daily notes, my daily newsletter since October, right? And certain names like copper and crude are definitely indicating that's where we're heading. What's my take on the Russell? Will it continue? Bill, yes, likely. Yeah, likely. I think that right now, when you have sort of a value trade back on, names like Russell and the Dow are going to continue to benefit. Although in a stage B environment, small caps do well. That kind of brings up a good point. So what do I think about right now moving forward into 2021? In the macro stage that we're in, I have an A, B, C, D macro stage approach that was taught back in the late 90s. And I've tweaked it to make it simpler than I was initially taught it, but it still applies. And we're in the B stage, growth, inflation. And that's that reflation trade I'm referring to. So the Russell is going to do well in this environment. Bill, small caps do well. High beta tech stocks are going to do well, generally speaking. And you're going to see a lot of just overall movement higher, which means for those of you that are familiar with the term, short squeezes or high short interest stocks are typically also going to move up higher as traders start moving back into equities. And that's exactly where, like a good German shepherd, Jerome Powell is herding the investors and traders into corporate debt, into the equities markets. All right. So I think the dollar is also going to have a very rough time, and it has. I'd be very cautious for now with bonds and ComDolls. I would look to buy ComDolls. So those are the kind of things that will continue to happen into next year. Next question is Tesla. What will happen throughout the day? Again, just remember, the benchmarks and ETFs that follow the benchmarks have got to add Tesla. We've had this question kind of on and off since Tesla's being added to the S&P. It's much more impactful to Tesla, gang, than it is the underlying index or ETF. Remember, the underlying index or ETF is going to benefit from Tesla moving into that passive investing world. Tesla's going to benefit from that. They're not until Tesla continues to move higher. So Tesla as a weighted stock, and a heavily weighted stock in some instances, because it has to be added, the buying will continue. Be careful of a little bit of a pullback after that date. But when does Tesla impact the indices or the ETFs that they're being added to? As it continues to rally. So the first step is Tesla will benefit. The second step, if Tesla continues to rally, is that the ETFs and the indices that Tesla's more heavily weighted within will then benefit. So I hope that helps. explain kind of the dynamic. It's not great for the S&P right off the bat. That's later. It's better for Tesla right now. Okay. And by the way, let's talk about Tesla and the structure. We've talked about stock structure that we want to focus on. For what we've seen in Tesla, look at how the history of the moving averages, what I call the double green environment, look how long it's been basically indicating up, little sideways, but up, right? There's no reason to be really betting against Tesla, betting against the market, picking a top, being contrarian, waiting for some big rollover, hedging. None of those things to me apply tactically in an environment like this. Be very, very cautious taking that contrarian approach. Yes, might we pull back? Sure. But unless that pullback is an actual strategy for you and your approach, just let it happen, right? All markets go through those ebbs and flows. So just keep that in mind and don't overreact to what could be a little bit of a pullback. I don't think we break the uptrend. So we could think about taking advantage of the movement lower, which I'm not interested in, or we can take advantage of the movement lower by buying the dip, right? And that's where my focus is going to be. Now, if you need to, hedge, it's a completely different conversation, but I've had some questions about that, and I do not do that, okay? Paul, thank you guys for joining in and always letting me know when my mic is off. I'm a trader. I'm definitely not a podcast host or anything, but I do enjoy this time with you all. Best starting point between options and spot FX for the greatest and most seamless returns. Best starting point, trends, my friend, and everything, right? You want the high probability trades and see, look, that's the holy grail, right? So I would tell you, just find the trends. I don't care what you find the trends in. Not one bit. I'm not going to say Forex over futures, over stocks, over ETFs, over crypto. No, not at all, my friend. Find where the trends are. The sun is always shining on one market or the other at any given point in the year, and any given point in the month. Find the trends. That's always going to be what I would recommend. Okay. All right. So as far as those of you that like Amazon, I hear you, my friend. Try XLY. 25% of the XLY ETF is Jeff Bezos. So definitely focus on that as an alternative, as a proxy. Yeah. I'm a pullback person. I am a trend follower, Jonathan. I am a trend follower that seeks to increase reward, reduce risk, and play the dips within trends. So buy the dip in and of itself is really meaningless unless you add to that the prerequisite of a trend. Otherwise, we're not buying a dip at all, are we? We could be caught up in chop and applying a very good type of technique to a very wrong kind of market. All right. Okay, so gang, I keep running over. I guess we might have to make this a 25-minute show or start at 8:55. But thank you, as always, for your time. Have a great Friday. Please don't overtrade on an options expiration Friday, and I will see you on Monday. All right, gang, and on Monday, I'll talk a little bit more about some of the macro and some of the setups that we'll be doing in Sector Secrets live trading on Tuesday. In the meanwhile, if you want to keep up with some commentary that I've got a free newsletter that goes out at countdowntrader.com. Check it out. I'll see you on Monday. Be good to each other, gang.